Income earned and received in Japan. It is taxable in one case, not taxable, not taxable. I'm receiving 18,000 in India. Whenever they say use the word you received here, so it is taxable in all the three cases. Interest earned and received outside India, it is taxable in one case. In both other cases, it is not taxable. Warm welcome to 5th Sem BBA students. We are discussing subject called income tax. Unit 2, residential status and incidence of tax. In today's session, we are going to solve problems on incidence of tax, which is very important for the students to learn and to write in the semester examination, where they can score centum marks easily. I'm Professor Rajesh L.R. from Department of Commerce and Management from Vidhyaashram First Grade College, Temple of Excellence, MYSURU. In our previous session, we have solved two problems on incidence of tax, and in today's session, again we are going to take some other points with the previous data, whatever we had. We are going to solve additional two problems, which will be better for you people to understand each and every concept where you can write easily without any mistakes. The first problem we are taking here, I'm Mr. Naresh. I'm just giving my information for you to ascertain and say me, if I'm a resident, what is the total amount I'm going to get here and what is the taxable amount I have to pay. And if I'm not an ordinary resident, so what is the total amount you're going to consider for the taxation, and if I'm a non-resident, what is my total amount you're going to consider for tax. So in these three cases, you have to identify and you have to advise me. If I'm a resident, what is my total income? If I'm a non-ordinary resident, what is my income? And if I'm a non-resident, what is the income they're going to consider for the tax purpose? So first one we have here, I'm receiving 18,000 income in India, which is accrued in America. They're saying that one, I'm receiving 18,000 in India. Whenever they say use the word you received here, so it is taxable in all the three cases. That is resident, not ordinary resident and non-resident. It is taxable in all the three cases. Next one. Second one. Income earned in India. If they're given the word as earned in India, it is taxable in all the three cases. If I've earned income in India, it is taxable in all the three cases. If I receive income in India, it is taxable in all the three cases. Remember that one? Earned and received in India. If the words they have mentioned, earned in India or received in India, it is taxable in all the three cases. Next one. I'm earning 22,000 and received that income in Italy but brought to India, where I've earned income outside India. I'm not earning income in India. I've earned income outside India, and even I'm receiving income outside India. So then it is taxable in one case and it is not taxable in other cases. Next one. Fourth one. I'm getting 45,000 income, which I've earned and received in Japan, but I've not brought that amount to India, even though if I'm a resident, I have to pay tax here. That is taxable, not taxable, not taxable. I'm bringing rupees 26,000, an untaxed foreign income, which I've earned preceding previous years, and I'm bringing in the previous year. It is not taxable in all the three cases. Okay. What is the first point we have here? Received in India, taxable in all the three cases. Earned in India, taxable in all the three cases. Earned and received outside India, taxable in one case. Earned and received outside India, taxable in one case. Earned and received outside India during preceding previous year, brought that one to India during previous year, that is not taxable. In income tax, we are going to consider the income earned during previous year. See, income earned in India taxable in all the three cases, 18,000. Income earned in India, taxable in all the three cases. Income earned and received outside India, that is Italy. So it is taxable in one case, not taxable, not taxable. Income earned and received in Japan, it is taxable in one case, not taxable, not taxable. Any untaxed foreign income brought to India during previous year is not taxable, not taxable, not taxable. If I am an ordinary resident, my total income will be 18,000 plus 10, 28, 30, 50, 95,000 is my total income. So on 95,000, I have to pay the tax to the government. If I'm not ordinary resident, 18,000 plus 10, 28,000. My income, they're going to consider 28,000. Even if I'm a non-resident, they're going to consider as a 28,000 is my total income. So where I have to pay tax on 28,000. If I'm a resident, ordinary resident, then my income will be 95,000. And if I'm not ordinary resident, so then my income will be 28,000. And if I'm a non-resident, my income is 28,000. This is how we have to solve the problem. So let us go to the next problem where we can understand easily and which will support for you people to learn the concept. See here, in the fourth problem, I'm Mr. Giridhar. I'm giving you 1, 2, 3, 4, 5, 6 different types of sources of income. Understand properly. The points have been changed here. And the concept is the same here. If I'm a resident, ordinary resident, what is my total income? Not ordinary resident and non-resident, what is my total income? We have to calculate. See here, I have a business in USA which is controlled from India. See, I have a business in USA where that business is controlled from India, then it is taxable in all the three cases. Next one, I have a business in Canada which is controlled from Mysuru, and 1/4 received in India. What they are saying, I have a business in Canada and which is controlled from Mysuru, and I'm earning income in India, that is taxable 1/4, that is 1,60,000 into 1/4, that is 40,000 is taxable in all the three cases, and remaining 1,60,000 minus 40, 1,20,000 is taxable, not taxable in one case, because earned and received outside India. If it is received in India, it is taxable in all the three cases. Next one. Any dividend received from either domestic company or foreign company, either Indian company or foreign company, it is taxable in all the cases, taxable in all the three cases if it is received in India. If it is received outside India, earned outside India, taxable one case. With effect from 1st April 2019, after removal of dividend distribution tax, Income Tax Act 1961 made some modifications stating that when any dividend income received by assessee from Indian company, it is taxable for the previous year in which year he has received the income. Next one, interest received in USA, earned and received in USA, taxable in one case, not taxable, not taxable. Income from transfer of house property in India, taxable in all the three cases. Royalty received in Germany, taxable in one case and it is not taxable in other cases. So this is how we have to analyze the problem first and then we have to solve the problem. I must Giridhar here. What was my first income? I had a business in USA which is controlled from Bangalore. Profit from business in USA controlled from Bangalore. What is the amount? 1,50,000. So 1,50,000 is taxable in all the three cases. Taxable in all the three cases. What is the second one? I have business in Canada. Profit from business in Canada. 1/4 received in India. 3/4 received in Canada. 1,60,000 into 1/4. 1,60,000 into 3/4. So 1,60,000 into 1/4, that is 40,000. 40,000 is taxable in all the three cases. 1,20,000 is taxable in two cases. Not taxable. What is my third point? We have here dividend received from Indian company. Dividend received from Indian company. It is taxable. So dividend received from Indian company, that is 75,000. It is taxable in all the three cases. 75,000, 75,000, 75,000. It is taxable in all the three cases. What is my fourth income? Interest received in USA. So fourth point, interest received in USA. How much I am receiving interest here? Interest received in USA, 65,000. If I am an ordinary resident, I have to pay tax for 65,000. Not taxable, not taxable. What is my fifth one? Income from transfer of house property in India. Income from house property in India. How much? In India, it is 95,000. So it is taxable in all the three cases. 95,000, 95,000 and 95,000. Royalty income. Royalty income. Royalty income from Germany. Royalty income from Germany. It is taxable in one case, 50,000. Not taxable, not taxable. Now, 1,50,000, 1,90,000, 2,10,000, 3,10,000, 3,85,000, 3,90,000, 4,50,000, 5,45,000, 5,95,000 is taxable amount. 150, 190, 210, 3,10,000, 3,85,000, 3,90,000 and 4,80,000 is taxable amount. 150, 190, 2,65,000, 2,70,000, 3,60,000. 3,60,000. If I am an ordinary resident, my total income will be 5,95,000. If I am not ordinary, my income will be 4,80,000. And if I am non-resident, my income is 3,60,000. On this amount, we have to pay tax to the government. This is how we have to solve the problem. So, understood this one? This is very simple and it is very clear for you people. Every point has been explained and we have solved here. Go through this one. If any doubts are there, get clarified and get into the semester without any additional risk facing that one to solve the problem here, right? Next one we have here, problem number 5. I'm Mr. Mahesh. Same thing here. Profit from business in France, which is controlled from Bangalore. taxable in all the three cases. Profit from business, that is again, it is 1/4 into 1 lakh, that is 25,000 and 75,000. 25,000 is taxable in all the three cases. Taxable, taxable, not taxable. Dividend from Indian company, taxable, taxable, taxable. Interest earned and received in India, taxable, not taxable, not taxable. Income from transfer of house property, taxable, taxable, taxable. Royalty earned and received in France, taxable, not taxable, and not taxable. This is the thing what we have. So this is how we have to analyze the problem. It makes you people to solve the problem easily. The first one, profit from business in France. Profit from business in France. Controlled from Bangalore. What is the amount? What is the amount here? 1,80,000. The amount is 1,80,000, 1,80,000, 1,80,000. This is your first point. What is the second point we have, my dear? Profit from business in Japan. Profit from business in Japan. 1/4 and 3/4. 1/4 of 1 lakh and 1/4 of 1 lakh, that is 25,000 and 75,000. So 1/4 into 1 lakh, 3/4 into 1 lakh, that's 25,000. 25,000 is taxable in all the three cases. 75,000 is taxable in two cases. Taxable in two cases. This was our second point. What was our third point? Dividend received from Indian company. Dividend from Indian company. 25,000 is taxable in all the three cases. 25,000, 25,000, 25,000. What is the next one we have here? Interest earned and received in USA. Interest earned and received in USA. Royalty earned and received in France. In France. So both these concepts are taxable in one cases. That's why we have taken here. Interest earned, it is 65, royalty is 40,000. So 65,000 and 40,000 is taxable in one case, and in both the cases it is not taxable. Not taxable. Income from house property in India. If they have mentioned India, it is taxable in all the three cases. What is the amount? Income from house property, 1,25,000. That is 1,25,000. 1,25,000. 1,25,000. 0, 0, 0. 5. 5 plus 5, 10. 15, 20. 0, 2 carry, 2 plus 2, 4, 4 plus 5, 9, 9 plus 5, 14, 19, 19 plus 8, 4,30,000. Next one, 1,80,000, 2,30,000, 2,30,000 plus 125, 3,55,000. 3,55,000. 1 lakh 80, 2 lakh 80, 3 lakh 5, 4 lakh 5, 4 lakh 5 plus 1, 5 lakh 5, 5 lakh 30,000. So it will be 5 lakh 35,000. In the second case, it is 4 lakh 30. In the last case, it is 3 lakh 5,000. This is how we have to calculate and we have to solve the problem. Profit from business in France received in India, 1 lakh 80, taxable in all the three cases. Dividend from Indian company, taxable in all the three cases. Interest earned and received outside India, it is taxable in one case. In both other cases, it is not taxable. This is how we have to solve the problem. In the upcoming session, we're going to learn the concepts of income from house property. Then we are going to complete deductions and later we are going to have income from salary. So this is how we're going to have the sessions in the upcoming. Thank you to all my 5th sem BBA students and namaste to all.